Good morning, everybody. So this week we're going to do the final iteration in the series of how to review your actual tax returns. So at this point we've covered S corporation and corporate tax returns, Form 1120. We've talked about partnership tax returns, Form 1065, and today we're going to talk about your individual tax return, Form 1040. So go ahead and share screen. Got the form pulled up already. So this is the 1040 individual income tax return for 2024. So of note, sometimes this can be confusing. We call it the individual income tax return, but it's talking about individual as a person versus a business tax return for like a corporation or a partnership. So this is not implying that if you are married, you use the same form for your tax filing for married filing joint, married filing separate, or single. Um, it's still an individual income tax return. And so then you have your filing status down here, which is where we talk about you have single, married filing joint separate, filing separate head of household, uh, surviving spouses, and non-resident alien statuses. So up here is just your personal information, social security number, address, um, and married filing status. Then the very first actual tax question is, do you have any digital assets? This is like cryptocurrency, um, Bitcoin, stuff like that. And if you had any transactions during the year that could potentially result in either a taxable gain or a taxable loss. The IRS has made this one of their top things that they are looking at. And technically, if you fail to answer this question correctly, you have a falsified tax reform or a falsified federal form, and they can hold you accountable for that. And if you've marked it incorrect and the IRS notes that, technically there is no statute of limitation since it has been filed incorrectly. What does that mean? Normally, your statute of limitations is 3 years. That means the IRS can do an audit or what's called an examination for back to 3 years from the date of filing. So that time window doesn't start if you incorrectly answer that question. And that's why they've put it right here at the top, is because it's one of the big things they are looking at. The next question is standard deduction. Are you able to claim it? Can your spouse claim it? That's really just an FYI question. Blind, if you're blind, or if you are of retirement age, you get a couple additional benefits in the standard deduction. Then you list your dependents. Um, there's different types of dependents. Usually those are direct dependents like children. Sometimes it can be people that you are living with you that you're covering more than half of their cost of living. Then we list all your income. So this is W-2 income, income not reported on W-2s. You have some other income, a few other things, but basically your main things are W-2 income, and then down here we have income from Schedule 1. Where line is that? Uh, Other earned income, qualified dividends. Oh, there we go. Line 8. So additional income from Schedule 1. So your big items are W-2, line 1A, and line 8. So 8 is where all your business income is reported. It's all lumped together and put into that line. So if you have a Schedule C business, you have a corporation, a partnership, a K1. Those are from the other forms we've talked about. If you have rental properties, anything like that, all gets lumped together on line 8. Uh, you have interest and dividends on 2B and 3B, and then you have capital gains on line 7. So those are really pretty much the biggest things. Um, Interest and dividends result in a Schedule B. Capital gains result in Schedule D. Schedule 1 is other income, mostly business income, and then sometimes you have some deductions off of Schedule 1. So that is on another line, adjustments to income from Schedule 1. So then, yeah, now we get into some of our deduction stuff. Um, we have some potential deductions off of Schedule 1. Those usually aren't applicable. Then you have what's called adjusted gross income. This is what everybody wants to see if you're looking for lending, going to the bank, anything like that. Everybody asks AGI or adjusted gross income. That's right here on line 11. Basically, that is W-2 wages, dividends, interest, capital gains, business income, and then a few adjustments. That would bring down your adjusted gross income. The adjustments are things like the deductible portion of self-employment tax, self-employed health insurance, and a few other things. After your AGI is when you can take the standard deduction or itemized deduction that results in a Schedule A if you itemize. Standard deduction is listed right here. So single or married filing separately is 14,600. Married filing joints 29,200 and head of households 21,900. Those are just automatic deductions you get for being alive and filing your tax return. Then, if you do own a business, so that could be a sole proprietorship filed as a Schedule C, that could be rental properties that rise to the level of a business, or if you have a partnership or a corporation, we have this thing called the qualified business income deduction. So 12 lines 12 and 13 are two major deductions. And then you have taxable income. Taxable income goes into tax brackets on a table, and for the most part, you owe the amount of tax the table says that you owe if you make that much income. Then there's a few, basically what we call, they're called credits. So you have above the line deductions. That's the standard deduction, the qualified business deduction, and adjustments to income. When we say it's above the line because it's before taxes are calculated. And then we call credits below the line deductions because they are after taxes are calculated. So credits are typically dollar for dollar, whereas above the line deductions are based on your tax bracket. So credits, you have your child tax credit, and you have a couple other credits that can come into place that usually result in other schedules to be attached, such as the energy efficiency credit, meaning you bought like a Tesla or you put in a new HVAC system in your home, and a few other things that you can get credits for. There's not a whole lot of them. Then we have payments. So this is where we take into account any money you have paid into the IRS throughout the year. So this could be income tax withholding on your W-2, if you had income taxes withheld from any 1099s through your investment accounts or anything. Um, then we have this weird thing called an earned income credit on this point, and we have the additional child tax credit, and we have the American Opportunity Credit. These three credits are dollar for dollar credits that really should be up here in the credits line, but the reason why they're not is because they're what we call refundable credits, meaning any credits up here will not result in you getting cash back. They just lower your actual taxes. These three specific credits are called refundable credits because even if you didn't pay in any money, you can still get these credits back. And so that's what you can end up with a refund uh, if these credits apply. So earned income credit means basically you're below a certain threshold and you have W-2 wages or self-employment taxes paid on profit. Additional child tax credit, that's automatic if you're below certain thresholds and you have children. And the American Opportunity Credit comes from typically the first full years of post-secondary education, college, trade school, stuff like that. And then you have where we calculate if you owe any money or you're getting a refund. So the three big lines on, or the really just the two big lines on this whole form that everyone cares about is adjusted gross income, line 11, AGI, because that says how much money did you make. Um, for bank purposes. This is a paper calculation, so it's not economically how much money you made, but it's for tax purposes, bank purposes, and it's close or should be close to economically correct, depending on how we're doing things in your business. So that's the number one line that people like to see is adjusted gross income, and then the bottom line is if you're going to owe anything. Um, which would be basically line 34 here. If that is uh, if line 33 is more than line 24, so this is your total taxes, and then your payments, so taxes minus payments. If 33 is greater, you get a refund. If 33 is less, then you owe taxes. So that's kind of the biggest lines are line 11, line 34, or line for a refund, and then line 37, how much you actually owe. So those are the three big lines. Line 11 for adjusted gross income, 34 if you're getting a refund, and 37 if you owe. That's pretty much the whole tax form. Uh, if you were to fill this out yourself, most of these lines will tell you if there's an additional schedule required, and you would go fill out those schedules to report those specific things. All right, so hopefully this helps you better understand how to look at the important lines on your Form 1040 individual income tax return, and have a wonderful weekend.